Hi you guys, welcome back to the channel. My name is Brad. This is the Firefighter's Financial Toolbox. Today we're going to talk about a monthly dividend paying ETF. We're going to talk about the Invesco S&P 500 High Dividend Low Volatility ETF. That's ticker SPHD. Let's talk about a couple reasons why we would want to hold this fund. Now, full disclosure, I do not have this fund, but I'm always looking for things to add to my portfolio. So let's read the fund description. The Invesco S&P 500 High Dividend Low Volatility ETF seeks investments results that generally correspond before fees and expenses to the price and yield of the S&P 500 Low Volatility High Dividend Index. The fund generally will invest at least 90% of its total assets in common stocks that comprise the index. Standard & Poor's compiles, maintains, and calculates the index, which is composed of 50 securities traded on the S&P 500 index that historically have provided high dividend yields and low volatility. The fund and index are rebalanced and reconstituted semi-annually in January and in July. So let's talk about the fund. Important things. What does it cost? First of all, the fund's been around since October of 2012, so it's got about an 8-year track record coming up now. Currently has a management fee and expense ratio of 0.30%, so 30 basis points. A 30-day SEC yield of 4.92%. A PB ratio of 3.38. A PE ratio of 17.17, so nice and low. And a weighted market cap of about $52 billion. Let's take a look at the section breakdowns. First of all, these are all U.S. stocks, you guys. 100% of the holdings are in the U.S. If we look at the breakdown, you see that the biggest holding is real estate at about 19.75%. Next is utilities at about 15%. Then financials at a little over 14%. Consumer staples at about 13.75%. Energy at 10.6%. Communications at 8%, healthcare at about 4.75%, materials at 4%, industrials at 3.75%, consumer discretionary at about 3.5%, and information technology makes the smallest sector at about 2.5%. If we're looking at the top 10 holdings, you guys, number one holding is Williams Companies, then Iron Mountain, Altria, Gilead Sciences, Philip Morris, Dominion Energy, General Mills, IBM, AT&T, and the 10th in that group is Progressive. Alright, so if we look at how this has been faring this year, you guys, just like everything else, it's down. If we year to date, we're down about 23.09%. But if we look at the since fund inception, it's about 7.5% overall. So over the long track record, it is a good dividend payer, and it's got a nice high dividend payout. So let's talk about 4 big benefits of having a monthly dividend ETF. Okay, the 4 big reasons why. First of all, frequent payday. Every month you're getting a steady income of dividends. Okay, so if you're in retirement, every month you're going to get a paycheck. You're going to get some dividends paid out to you on a regular basis, which is nice. Second thing is diversification risk. Because it's an ETF versus an individual dividend paying stock, you have the advantage of having 50 companies in there that, while one may be down a little bit, another one may be up a little bit. Third thing is drip potential. So if you're not in it and you're still in the building phase, you guys, you can have those dividends reinvested to grow that balance up and up and up, so that when you do need to take the income from it in retirement, you'll have a larger balance. The fourth thing is wide variety. This one has 50 companies, but there are plenty of different ETFs that are monthly payers that could be in anything. You could find international stocks. You could find one that specializes in realty, or even bond funds, you guys, that pay monthly. There's a lot of different ETFs available for monthly dividend payers. And again, because it has that regular income, makes it a broad choice. Now, SPHD, is it a good choice? I think for the right person, it could be a good fit. For me, in the building phase, I have the dividend payers that I like, that I use. So it's not a right fit for me now, but for a lot of people it could be. What do you guys think? Do you hold SPHD? If you do, let me know in the comments. Let me know how you like it, or if you don't like it. Let me know why you would choose that over another one, or whatever. Alright, you guys, hope you got something out of this. If you did, you know the deal. Give me a thumbs up. Hit that subscribe button. Ring the bell. You'll get notified every time I make a video. I try to make at least one a week. We'll see ya.